According to International Business Times, Palantir's flagship National Health Service contract in the United Kingdom is suddenly looking a lot less secure, and that has meaningful implications for investors trying to value the company's long-term government software franchise. According to International Business Times News, the report focuses on Andy Burnham, who is now widely expected to become the next UK Prime Minister after Keir Starmer's resignation. The key point for markets is that Burnham is reportedly prepared to distance the NHS from Palantir and potentially end its 7-year, £330 million Federated Data Platform contract, mainly over ethical and political concerns rather than performance shortcomings. International Business Times mentions that this contract is central to Palantir's UK healthcare footprint. The platform underpins the NHS Federated Data Platform, a system designed to help hospitals manage patient data, reduce waiting times, and improve operational efficiency across the English health system. According to NHS figures cited in the article, more than half of NHS trusts in England are already using Palantir technology, and early results look quite strong. Over 110,000 additional operations since the program launched, improved utilization of operating theaters by roughly a low double-digit percentage, and reports of faster cancer diagnoses and shorter discharge delays. From an investor's perspective, that operational track record would normally create stickiness. Once software is embedded across more than half of a national health system and demonstrates measurable impact on throughput and clinical pathways, you would typically expect renewal to be almost automatic. The article, however, underscores how non-financial risks, especially geopolitical, ethical, and reputational considerations, can override pure ROI in public sector tech contracts. Let's unpack what this means for Palantir as a stock and how an investor might frame the situation. First, the contract in question, the NHS Federated Data Platform. This is not just any deal. It is a multi-year, national-scale platform contract worth in the hundreds of millions of pounds, signed in 2024. It is an anchor reference account for Palantir in European healthcare and a crown jewel use case for its Foundry-style platforms in a highly regulated environment. When investors look at Palantir's government segment, they see these types of contracts as long duration, highly defensible once implemented, and carrying meaningful potential for upsell in adjacent agencies and countries. The NHS deal, if it runs its full term, supports the thesis that Palantir can become a critical infrastructure player in Western healthcare analytics. The article makes clear that pure performance metrics favor Palantir. The reported uplift in theater utilization and additional surgeries is precisely the kind of quantifiable outcome that usually cements a vendor's position. In many enterprise IT situations, once you've proven you can increase throughput, shorten wait times, and deliver clinical gains, procurement teams are reluctant to rip and replace. The friction costs retraining staff, migrating data, recertifying systems are not trivial. Yet, the political overlay here is substantial. Burnham is portrayed as someone who has already shown skepticism toward Palantir. During his 9 years as mayor of Greater Manchester, he reportedly refused to award Palantir any contracts, and that prior stance is now shaping expectations about his approach as a national leader. For investors, this history is important. It suggests his reservations are not opportunistic or purely situational, they are rooted in a longer-standing view of Palantir's role within the public sector. So what are the drivers behind the possible cancellation? According to International Business Times, the pressure against Palantir is largely ethical and political. Left-wing Labour MPs, trade unions, and advocacy groups have been campaigning for the NHS to sever ties with Palantir, focusing on the company's involvement with the Israeli Defense Forces and United States Immigration and Customs Enforcement. Palantir has publicly acknowledged that it supplies AI and data analytics tools to the IDF and that it provides software platforms used by ICE to integrate and analyze data for immigration enforcement, detention, and deportation operations. From a stock analyst's lens, this is a classic case of ESG and geopolitical controversy feeding directly into contract risk. It is not that the NHS software does something unethical inside the UK itself. Rather, critics are objecting to Palantir's broader portfolio and to its founders and CEOs' political positions, including Peter Till's well-known backing of Donald Trump and past critical remarks about the NHS, along with Alex Karp's public support for Trump in certain contexts. This creates brand risk in left-leaning political environments. A future Labour government that is sensitive to its base, including unions and activists, may see continued partnership with Palantir as incompatible with its social values, even if the technology materially benefits patient outcomes. The article also notes that there has already been a parliamentary motion criticizing the Ministry of Defence for awarding Palantir a sizable contract without a competitive tender. That signals that Palantir's presence across UK government isn't just a healthcare story, it is part of a broader debate about procurement transparency and militarized technology. Technology Secretary Liz Kendall has faced repeated questioning about whether Palantir should remain in the UK's healthcare system, even if she has not explicitly called for the contract to be scrapped. Moving from the political backdrop to the mechanics, the NHS contract includes a break clause next March. For a government lead by Burnham to exercise that clause, ministers must notify Palantir by December, otherwise the contract continues automatically. This timeline is crucial for investors. In practical terms, that means several things. First, for the remainder of the current year, Palantir will likely face an elevated headline risk environment tied to any UK political developments. Every statement from Burnham, his health team, or senior labor figures related to AI, data ethics, or procurement can move sentiment around the stock, even before any official notice is given. Second, there is a genuine execution and transition risk embedded in the NHS side. Even if the contract is ultimately renewed, the run-up to December may see pressure on Palantir's ability to expand functionality within the NHS or sign adjacent deals. Procurement officials often slow-roll major expansions when political direction is uncertain. Third, the downside case in actual cancellation would have several layers of impact. At the direct revenue level, losing a long-term contract of this size would not be catastrophic for Palantir's overall financials, but it would remove a meaningful stream of high-margin government revenue and force investors to trim their long-term annual recurring revenue expectations for the UK public sector vertical. At the strategic level, the bigger damage could be reputational in Europe and other social democratic markets. If the NHS, a flagship Western healthcare institution, publicly drops Palantir on ethical grounds, that creates a powerful narrative for activist groups in other countries. It might be cited in debates across continental Europe, in Canada, and in other jurisdictions where center-left parties shape public sector IT decisions. At the valuation level, this could compress the multiple investors are willing to pay for Palantir's government business. Markets like government software precisely because of its perceived durability. If that durability is subject to ideology swings after elections, the risk profile changes. Investors might price in higher contract churn in left-leaning democracies, especially when vendors have controversial security or defense ties. On the other hand, it is important to note that the article also captures voices warning against politicizing the contract. Shadow Health Secretary Stuart Andrew argues that if Burnham cancels a program that is improving patient care, he will have to justify choosing politics over patients. Shadow Business Secretary Andrew Griffith underscores that systems like Palantir are essentially optimization tools and questions whether removing them truly helps patients. For investors, these counter-arguments highlight a core tension. There is a constituency including some politicians that values outcomes and efficiency over ideological purity. That matters, because even within a center-left government, not everyone will necessarily support ending a system that is demonstrably easing severe NHS backlogs. So how should an investor think about scenario paths from here? One scenario is partial decoupling rather than outright termination. The Burnham government could choose to honor the existing contract through its current phase while signaling that future expansions or new awards will favor vendors with less controversial defense and immigration profiles. That would allow the government to avoid near-term disruption in hospitals while gradually reducing reliance on Palantir. Another scenario is a clean break at the first available opportunity, driven by pressure from backbench MPs, unions, and campaigners. In that case, the government would need to quickly identify alternative suppliers or build more capabilities in-house. For Palantir, that would likely mean a moderate revenue hit, a negative change in sentiment, and perhaps a temporary overhang on the stock as markets digest broader implications for European public sector growth. There is also the possibility of a more nuanced compromise. The NHS could retain Palantir for certain operational modules while limiting its access to more sensitive or centralized patient data layers, combined with strict oversight. This would maintain some performance gains while addressing a fraction of the political concerns. Investors should also consider whether this episode could prompt Palantir to adjust its own strategy. The company is proud of its close links with Western defense and security agencies. That is part of its brand. But as its commercial and healthcare businesses expand, it may need to think more deliberately about portfolio segmentation and communication. For example, Palantir could emphasize firewalls between defense projects and healthcare solutions, highlight independent ethics boards, or design marketing that positions healthcare offerings as mission separate from military work. None of this eliminates controversy, but it might give centrist policymakers more cover to keep using the technology. Beyond the UK, this episode serves as a case study for investors in any dual-use technology stock. Companies that serve both defense and civilian sectors can enjoy high growth and strategic importance, but they also carry heightened political risk. When constructing a portfolio, it is important to recognize that contract durability in such names is not solely a function of product quality or switching costs. It is also contingent on the prevailing moral and geopolitical climate. Zooming out, what does this mean for Palantir's broader investment thesis? The article does not change the core reality that Palantir remains deeply embedded in multiple Western governments and appears to deliver tangible value in complex data environments. It does, however, underline that a significant slice of its opportunity, especially in socialized healthcare systems and certain European governments, is conditional on political tolerance for its defense relationships. In valuation terms, some investors may treat this as a reminder to apply a modest discount to projected international government revenue growth, or to reweight the story slightly toward U.S. commercial and defense segments that may be less vulnerable to this particular flavor of backlash. On the flip side, if Palantir manages to retain the NHS contract despite the controversy, that outcome could actually strengthen the bull case. It would signal that performance and operational necessity can override ideological pressure, at least in some contexts, reinforcing the idea that once Palantir is embedded, it becomes genuine critical infrastructure. Finally, timing matters. The contractual break clause and December notification deadline create a clear catalyst window. In the months ahead, investors will be watching for any of the following signals: concrete language from Burnham or his health team on Palantir specifically, more detailed articulation of the new government's AI and procurement principles, guidance from the NHS on contingency planning, and any initial moves by other vendors positioning themselves as more politically neutral alternatives. Until then, the article stresses that the potential end of the NHS-Palantir partnership is still unconfirmed. Health Secretary James Murray has described the ongoing review as part of normal business, and neither Burnham nor Palantir has publicly said the contract will be terminated. For now, then, this is a live risk factor rather than a realized loss. Stock investors should treat it as a reminder that, with Palantir, political narratives can be as material as technical performance. Thanks for listening to today's episode. If you found this analysis useful, consider subscribing and sharing the podcast so you don't miss future deep dives into market-moving tech and policy stories.